Following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're rocking and rolling today in a lot of these markets, so we should pay attention. We're going to start out here with the DAX. As you can see here, it started to show a little bit of weakness last night and has continued so far, but we've been in this really long trading range for the last 2.5 weeks. And if we break down below that, that's going to be a very, very negative scenario, because that means there was just a lot of distribution up at that area. The big news, of course, is the euro got above the 114 level. On the daily chart, that made an exact 786 off the high of 2016. So I don't know if that's going to mean anything or not, but at least that number, was hanging up there. The big thing, folks, is what we've been talking about since the beginning of the week, and that is this bond market. I mean, this bond market has, it's really telling you that, at least in my opinion, of course, that it's really telling you that interest rates want to go higher. And we're going to see, hold on one second here. Yes, 12,500 on the DAX would be what you'd be watching there. In my opinion, and please don't tell me. Yeah, it's working good. Okay, here's that Treasury notes versus Treasury bonds. As you can see here, the key here to folks, I can't use my mouse here to show it to you, but if you'll look at that dark maroon line there, right in the middle of the chart that looks like a cross. It starts around the 6th of June and goes out to the 25th. That's basically a head and shoulders pattern in the Treasury notes. And as you can see, the Treasury bonds popped up into new high ground. That's when they got up at that 157.08 level. Mr. Z in the room was also talking about the possibility of that being, a false breakout. And all we were showing you here was to give you an idea that the Treasury notes, which is a market that is 5 times bigger than the Treasury bond, and it is also 5 times the open interest in the Treasury bonds. It was not doing that. So this is the real interest rate. The 20-year notes, which is the note market, that's where you get your rates for your cars, your mortgages, your credit cards, and all the other consumer stuff that you deal with. That's where that comes from. That's how they gauge that. So that's telling you that those rates are starting to go higher. Now, what is totally ununderstandable for me, I don't know if that's a word or not, but that's what I'm going to use. I just don't understand how the U.S. dollar can be so weak with our interest rates going higher, because economics says when your interest rates go higher, people bring their money into your country to get a better rate. And that's what we've got going on. I think what the problem is that rates all across the world have also, discovered that this was the high, or the high was a year and a half ago, but now they're getting ready to see a spike in rates, I believe, which we're already starting to see. And that's what I think is happening. But I don't know. Whether that's going to affect stocks or not, folks, I don't know. All I know is that this bond market looks like it has legs to the downside. There's some pretty good support at the 153 level. And what we want to do here is we'll quickly look at this on a little bit longer term break, thing here, going over here over the last, give me a second here to get this chart up. Using a 4-hour chart, we'll go back and look at this. You'll notice that the 61% retracement of the last major low, which was back in May, comes in at 153.04. So we're not very far away from that. But going below 153.04, then it's got 151.28, which is the 786, and if we get below that, you're looking at something really serious. Now, the move down in April, this is important in my opinion. Take a look at this chart here between April and May. That's a 6-week time period. But let's try it again. It was exactly 1 month where the market came down and almost made a perfect 61. It got down to 55%. Took 1 month to do that. Now go to the right and see where we are in the last 4 days. You see how fast it's coming down? This is a very, very bad sign. This is similar to what happened back in March when we had the big move down into March. So this is a possibility here of something really significant, happening in the Treasury bonds. Whether that will roll over to the stocks or not, I'm not sure. But that's the only thing. What we were watching here in the den was this time, and if you can see the market up at this 157.08 level that was done on Monday. The market just barely gets above that and then crashes down. Now, that's not good action, and so these bonds look like they have legs to the downside. That's what it looks like to me. How the rest of the market reacts to that, I'm not really sure. I'm not sure how that's going to work, but that's all I know. Now, last night, we had something unusual happen, and that is that the NASDAQ, using the hourly chart, went up and made a 61% retracement at that 57.72. The high was 57.75, and it sold off somewhat, from that level. But that's still early in the game, and we don't know what's going to be, happening with that. But we'll be keeping an eye on it for sure, because it's given up quite a bit already. With the rest of the markets, the Dow and S&P still being up, the NASDAQ has given up quite a bit of its gains and got down below almost not near the lows of yesterday, but at least into that unchanged area of yesterday. And there's one other market that we've been watching for quite some time, and that is this is that crude oil market. And we'll just put this up to see. And all this is, folks, is just a simple ABCD pattern. That's all we're looking at right here. Boy, this little mouse is just giving me some trouble. You'll see that the price objective on this was at 45.30. That was nothing more than an ABCD pattern coming together at the same time. And the time up is equal. In other words, it took a day and a half to make the rally in both sides. So we'll see if this is going to be a place where we get a little bit of a pullback in crude oil, because there should be really strong support in crude oil around the 44 level. That's what I would be thinking from a crude oil standpoint, that it would be doing that. So watch it really sort of closely, so that you're able to gauge it if it's a time where you think you're going to be able to enter the crude oil market if you're not in it already. We're going to be coming up to the first break here in a little bit, and then I did want to cover last night at the when I gave my little speech about all my years in the business. There was a couple of residual questions, and I'll try to answer them as we come back from the break. They're rather simple, but they're interesting questions, at least from my point of view they are, and we'll see if we can answer it. Now we have to talk about the gold and the silver, because these markets they just don't have the oomph to the upside like they should have, folks. It's just not moving as quickly as it should if it was really bullish. So those are the things that we want to sort of watch today, because it's Thursday. We got tomorrow, and then we've got that short week next week, with Monday's going to be virtually nothing's going to be happening on Monday. Every friend that I have is taking Monday off, and so it's going to be very interesting. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted the picture. It doesn't have all the things. And on the bottom of it, there was a big stack of Cougar Rands, and but this is what the picture what it looks like. It's basically 3 feet by 3 feet. It's oil on canvas. It was done by Elsie Darnielle, who was a very famous painter in California. She was made famous by the Reagans. They loved her work, and her husband happened to be a good friend and one of my customers at Drexel, and she painted this for me in 1977, and they gave it to me, and I put it in my office there at Drexel, and I have it at my office here in Tucson. It's been reproduced about 6 or 7 times. John Hill has one in his office, and a couple other folks too. But basically, these were the little pieces of paper you see, those little parchments. Those were little 3x5 cards where I had these patterns that John had put in his book on commodity trading back in 1965. And this work came from the work of George Cole and also Wyckoff and Schaubacher and some of the other old masters, and Gartley too. This was I didn't have the Gartley put in here because I didn't want anybody to know what that pattern was at the time. I was being selfish. Later on, I realized how silly that was. But those were the short-term patterns that I was looking at. I didn't get the butterflies, of course, until I met Bryce Gilmore. That was in 1988. And so, but these were the rules that I used. And believe me, folks, these rules come right out of Jesse Livermore's book, Reminiscences of a Stock Operator. And that banner on the top there, it says, "He who knows not what he risks, risks all." That's the only thing that we have to control in the risk-reward equation. So that's what you should focus on, is how much money you have at risk, because that's the whole ball game right there. You just don't have anything more than that when you're looking at, because you don't know what's going to happen next, even though you think you do. And the second thing is you don't know how much money you're going to make on the trade, because sometimes the market can really surprise you, and it usually does. But this was a real piece of one of my most treasured gifts, and I just wanted to show it to you. I have someone from the show last night asked to take a look at it again, and I just sent it out. If you want a picture of it, if you'll email me, I'll send you a. It's actually what this is. I'll send you this picture if you'd like to see it. Anyway, just those are the rules that I use. And number one is the most important at all, and that is never add to a losing position, folks. That's the one thing that will get you more in trouble than anything else. You can even trade without stops, but if you add to a losing position, you are doing yourself the greatest disservice that you could possibly ask for. And the reason for that is you're increasing your risk exposure when your analysis is wrong. You're already wrong about the trade. You're not right, you're wrong. And now you're increasing your risk exposure. Bad things happen when that occurs, and they continue to occur that way. So just keep in mind that if you're wrong, just either get out of the trade and clear your head and move on to the next trade, but certainly don't add to a losing position. Some people can do that, but it's not long before that big man with the sickle and the headscarf comes in and wipes you away. So be careful of adding to losing positions. That's just not a good thing to do. Now, I've been asked to take a look at the Dow Jones versus the Bradley model, because we had that big run up, another rally back. Let me just get this up here so we can take a look at it. We'll see. Look at now. Remember, we are coming into the time frame that has a traditional bullish bias. We're at the end of the month, and then we're also coming into the day before the holiday, which is the 3rd, which is usually an up day. This is going to be an interesting one because we're coming into the anniversary date of July 8th of 1929. So that's going to be another anniversary date that will be quite interesting to watch also. So keep in mind that this is going to be a very interesting time to be looking at. As you can see here in the Bradley model here, it's around the 8th or 9th of July where we have another key Bradley date. And if that happens to invert, that would really be something very, very significant. And it's certainly, certainly possible, for that to happen, because the Bradley model is pretty good, but it's very good at picking the dates in the short-term time frames. But for the longer-term time frames, you have to have huge stops, and we don't like that because you have to increase your risk by a certain amount. Now, there is one market that is. Before we get to the gold and silver, I'm going to probably do that at the break here. But let's take a look here at the U.S. dollar index, because this is a classic failure of the beautiful harmony that we had there. I mean, this had so much support at this 96.50 level. It stayed there for 3 days. It had what we would call a dead cat bounce, where it rallied a day or two, and then it is totally collapsed, and we're heading down towards the 78% level, which is right around this 94.75. Now, whether that'll be the bottom or not, I don't know, but it had such perfect symmetry between December of 2016 and April 2016. It equated to December of 2016 to January to June of this year, and it has broken. So that tells us that it wants to go lower. Now, I don't know where the dollar index is trading right now. It closed at 95.75, but at this another point lower, it's going to be very, very interesting. That could be, a place where maybe the euro is going to get to the 115 level, which is certainly possible. But once it broke that 96.50, that is when the euro took out the 112.90. When it took out 112.90, that's all it is, 95.65. Wow, I thought it'd be a lot lower than that. Shut the front door. What was the low? Can you tell me, Mr. P? I'd like to know what the low was, because I thought it would be a lot. We'll see. Okay, 43. That's not very much. So we'll see what happens. Anyway, we'll watch it. The British pound Also had a little bit of a rally, but it's still in a downtrend, folks. It's just making a 382 retracement up here at this 130 area. And all the focus, of course, now is on the central banks, starting with the European central banks. They're in control. And then, of course, we had Janet Yellen coming out, on Tuesday saying that there was no more chance of having a financial panic anymore because those days were over. And that one, I had to rethink that one a little bit. I keep this book on my desk, The Experts Speak, and it's about 600 pages of people making comments like that. I'm in that book 72 times, so I know that it's pretty interesting when you say something. That just because you say something doesn't mean that it's going to be the case. So remember what Mr. Bernanke said in October of 2007, that all lights looked green on the financial markets. Well, they looked green, but there was a fire truck coming down the road that changed those lights to red, and the market took a little bit of a dip to the tune of about 85%, which we don't see that coming this year, but you never know. Okay, we want to move on here to the gold when we come back from our break. Gold and silver, they're still acting bearish, folks. I can't see any reason to be a buyer here. They did make the 78% retracement so far in the gold, but we'll take a break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the folks in the den are talking about the deflation in the markets that we usually follow, like gold and silver and some of the others. But we're seeing some really strong moves down in sugar, which has been going down for months, and cocoa and cotton. Cotton topped about 5 weeks ago. They're all down today, so that's another sign. Deflation coming, and that means interest rates most probably will be going higher. I mean, that's not what they're supposed to be doing, but that's what they're doing. And we'll watch to see how this occurs. Now, let's take a look here at the gold market. This is a shorter-term 30-minute chart, and as you can see, it's had a really nice Gartley pattern down at the 1242. We've already gone below that. That's telling you that it wants to go even lower. You notice that $17 rally that happened just the other day. We were able to see that was a potential for a pretty good high because it was right at the 78% level, and it just has started to go down, and now we're down $17 from the high. So if it doesn't hold here at the 1240, that's not a very good sign, and it means we're most probably going to go a great deal lower. Now, the next chart that I want to show you is a 4-hour chart. And I like 4-hour charts because it gives you a lot of data. It goes back at least 2 months, and you can see that if you look at the ABCD pattern that we had during middle of June, between the 20th and 23rd, we made that perfect ABCD. That was right at a 382 retracement. That takes you down to 1218, and that's back to the old lows at 1220. So we could easily do that. Now, one other thing, I haven't drawn this in because I was looking at a little bit longer term, but it's very important to watch this because if you'll notice the price level at 1233, you'll see the double line there where you see a 1.27 and a 1.618. Well, I want you to envision a 3-drive pattern from the low on the 21st of June, then up to the 23rd, down to the 25th, up to the 28th, then coming down, which would be probably on Monday, we would be making a 3-drive pattern at the 1233 level. That's down $10 from where we are, but we could be there in 20 minutes today. We don't know that. And so if this 1240 level does not hold, the first level of support will be that 1232. That will be a 3-drive pattern going over the last couple of weeks, and that is a tradable pattern. And the reason for that is you're going to have 3 ratios coming together at the same time. Well, excuse me, 2 ratios plus the ABCD pattern. The A leg is up at 1260, the B leg is at 1236, and the C leg is at 1256, and the D leg comes in at 1233, and that'll be a 1.27 expansion, and it will also be a 78% retracement of the low that we made way back in May. So that's going to be a real interesting level to watch here in the gold because of the multiplicity of patterns that are occurring at that 1233 level. I'll be focusing on that one very, very heavily in the newsletter this coming week because this is really interesting that it's going to be coming together. And a 4-hour chart gives you a pretty good idea of what what things are actually really doing. Now, if we take a look at the silver market, just give me 1 second here, and I know I have the silver market because I got it ready just a little while ago. And where are you, silver? Why does it hide from me? There we go. Here we go. It didn't hide. All right, let's just take a look at it here. If you'll remember, just a few days ago, we were making a retracement down on that was actually last Thursday. We came down to a 78% retracement. We had a very nice move. If you notice the perfect ABCD structure that came in at the 50% level, that's showing 52% because the Pesavento patterns in Ensign software is so sensitive, it goes to the 100th decimal point. And but that's a perfect ABCD stopping exactly at the 1.27. That's where we came in yesterday at 16.85 per ounce, and now we're starting to back off. This is actually looking a little better than the gold market for the first time in quite some time, because if you'll visualize this for a minute, if we're looking for gold to get down to about the 1233 level, look how this would be if we could get silver down about another 25 cents down to 1650. You'd have a beautiful 135 pattern forming, as 1650 will be the 61% retracement off of the low of the 21st, and it'll be a 78% retracement on the low of the 26th. And so if it can get down there at 1650, that would offer a very, very low risk entry, because now, and not only that, but there'll be a really nice cycle phenomenon there. As you can see here, from the low on the 24th to the 26th, that would extend out to just about either tomorrow or Monday. And of course, Monday's going to be a really, well, you think it's going to be a slow day, but it doesn't always do that. But that's what the silver looks like. It looks like it has a possibility of having legs there. So watch it very closely, and we'll see if it's going to happen that way. We don't know, of course, but we will get a pretty good idea. Now, this NASDAQ, folks, has got a potential to take a flying Walinda. Let me tell you, this doesn't look good in the NASDAQ. I mean, we've given up 70 points in a matter of 5 in 4.5 hours. That's almost all of what we made yesterday. And so we're down 70 points from the high last night, 68 points. That's not a good sign. So we'll see if that's going to mean very much at all. What's interesting, I just happened to be taking a quick peek at the wheat market, and also beans. Beans have perked up a little bit, as has the wheat. So we're starting to see some non-deflation, I guess, in the situation for the grains, but that's still early. They haven't moved very much. They're only 12 cents off the bottom, so we have to pay a little closer attention to that over the weekend, because the real trades today are, folks, related to the stocks, of course, and the gold and the treasury bonds. Those are the ones that appear to be making substantial moves here, and so we'll watch it. But it's still early watching these in wheat and corn and beans and stuff. But we'll keep a close eye on that. I'm friendly to that stuff. I just haven't found a good entry point. That's the main thing that I'm looking at. We got a caller from Canada, Toronto, Canada. Michael, are you there?
Yes. Hi, Larry. Thanks for taking my call.
Thank you. What can I help you with?
I'd like to look at the VIX, the volatility index, not just the cash index, but also the futures, the term structure. Are there any charts that you have?
The only one that I had, I lost about 30 minutes ago, because I had a internet, but right before the show started, I had an internet went down, and I lost my chart on that. But what I can do, no, that's okay. Stay with me.
Must have been that firestorm there in Arizona.
No, I'm so far away from that place. That's way up in the mountains north of Phoenix, so there's really nothing going on there.
But that didn't affect you at all.
No.
No Mexican tunnels severed any cables or something like that.
We don't. No, it was just totally. It was just really nothing. I mean, it was just
really.
A lot of smoke up there. That's in Prescott, Arizona, which is about 4 hours from us. Stay with us, Michael. Okay, we'll talk about the VIX here in a minute.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks. We're talking with Michael from Toronto about the volatility index, and I posted the daily chart in here of the VIX index itself. The futures look very similar to the same chart because, you know, it's the derivative of where it comes from. So I look at this VIX index because people understand, you know, what that means as opposed to watching various, you know, contracts expires. But the one that's really interesting to me, Michael, is the one from the long-term weekly chart in the VIX. And we are setting at such a low level at around 10. As you notice, there's a really strong cycle there that happens to be 42 and 84 weeks long, and we bottomed there just a few weeks ago. We've stayed here at this level, but I believe sometime in this year that we're going to see the VIX above 35. We're going to take out those highs on this weekly chart. I really believe that. And the thing that put the final the little bow on the package was Yellen's comment the other day that we're not going to have any more financial panics. I cannot believe someone in her statue would say something like that. I just don't understand it. But you know, what do I know?
Larry, I've noticed in the past that have you ever traded VIX futures as opposed to trading VIX call options?
Yeah, it's like trading pork bellies. They're pretty volatile.
They are they?
Yes.
I find that most VIX call options they expire worthless. And you know, given the very low volatility we've had, very very narrow trading range, what I was considering was actually, instead of trading the VIX call options, was to start trading, say, not the front month futures, but maybe the second month futures on volatility and to hedge the portfolio.
Okay, before you do that, Michael, go to www.CME, that's ChicagoMercantileExchange.com, and check the open interest in both of those contracts. You're nearby and the second one out, and make sure that you have enough open interest in that second one. Otherwise, you don't want to get involved with it. The second thing,
very high?
No. Are you kidding me? No, they'll probably give it to you free. They might even pay you to take the trade.
Really? Oh, yeah, probably would, yeah. Basically, I've never traded futures, and that's another issue I wanted to discuss, is I'm really fed up with Canadian brokerage fees for options and even for stocks. And I was considering switching to futures, because you've alluded in previous episodes that you really encourage viewers to trade futures to basically save on commission. What's the most I should pay for a round trip?
I don't know. In the U.S., it usually is running now around somewhere between $5 and $10 is usually what it runs. When I was at Drexel, the commissions were, $40 and $50. So that's really virtually no commission at all. So,
you're paying $40 per contract?
Yeah, $40. That's correct. Yeah. That was all through 76 and all through 1982. The commissions never started to go down until the mid 90s. That's when they really started to.
How much did you pay for a round trip on the floor when you were a floor trader?
That was $2. That was a $2 trade. It was $2 in and out.
In and out. Okay.
Yeah.
So I should be looking around $5.
Yes, $5. You're basically like you're just like a floor trader. Now, when I said $2 in and out, it's $2 in and $2 out. So I was paying $4.
Okay.
You see, but everybody else in the world was paying $40 or $50. So that was a huge edge that I had.
Okay.
But now that edge is gone because we all have the same equipment, and we're able to, do the same stuff right off the bat. So that's the main thing.
And realistically, as a novice futures trader, I should basically trade just one contract, one E-mini S&P. I was also looking at one E-mini crude oil. Paper trade it for what? Well,
two things. Paper trade it for a while. And if you're going to start doing that, I would not start with the E-mini S&P or the E-mini Dow. I would pick one of the foreign exchange currencies if you can, because they're easier to analyze. They're not affected by some of these crazy reports. They're affected somewhat, but not like that we have with the E-mini currencies. Those are kind of tough. And another one would be to trade the mini bond contract, which is a really good thing to trade because it's pretty good volume. And also the mini crude oil contract. Both of those are really good to trade. But you said the key word, and that's paper trade for a while till you understand it, and then you'll be far better. If you got a question, give me a jingle, drop me an email.
Maintain a trading journal, right? And nothing is. I noticed. I really admire your system that you have on the charting. I think you had it with some company. Do you plan to basically have some kind of a business relationship with the company where you sell the trading software or you endorse it or something, then offer a trading package?
I had the opportunity to do that years ago, and I didn't do it. I probably is not the smartest thing ever done, but I've done a lot of those things. But no, that's all done by Ensign Software. And I think they charge $50 a month for the lease. Then you have to pay for the data feed. Your Forex data feed is free, but data feed from the futures will cost you some money. But you can get delayed data starting out. But keep your costs as small as possible. Do your paper trading. After you've gone through 100 paper trades, and you're profitable. Even if you're profitable just by $1, then you could start trading live. And then go really, because when you trade live, it all changes because money makes you do silly things. So be really careful, okay?
Okay, great. Thanks for the advice.
It's my pleasure, my friend. Thanks for calling in, and I love your city. I used to go up there every once in a while to see the Blue Jays play, but
they're last place.
Yeah, well, it doesn't make any difference. That means ticket prices are cheaper, pal.
Yeah, they are. Yeah, they're cheap, but beer's still $9.50 a can.
Are you joking me?
Yeah, hot dog is $1.
Oh my gosh! I don't know how a family afford to go to a game.
The locals who attend these games, they all work in the government, municipal, provincial, and federal government. They're all public servants. Yeah, like the average Torontonian doesn't go to the games; they can't afford it. So it's all civil servants, public servants, and street fat cats, entertaining their clients or whatever, lawyers or whatever. But it's the elites.
Wow.
Same with the Toronto Maple Leafs.
All right, my friend. Listen, thank you so much for calling in. I really appreciate it, and it's very helpful when people call in because, I can answer some of these questions because I do have a little experience doing this, and I like to hear where people are from and everything. So I really appreciate you calling in, Michael. Thanks a lot.
Thank you.
You bet. Okay, folks, let's get back to the markets here. Looks like we're under a little bit of pressure. We've now got we're almost at the 61% retracement on the NASDAQ from yesterday's low. Boy, if it gets below that, boy, we could be looking at something pretty well, we're right there right now, aren't we? We get much below 56.90, that's going to set up something pretty negative. We'll see if that's going to be the case here. Everything else seems to be going. At least the gold has held the 1240. We got down to 1239.70. It's held it so far. That's the 78% level. I'm not 100% sure that's going to hold. My bets are still off on that, but we'll keep an eye on it as we get through this rest of the show. Keep an eye on these bonds, folks, at this 153.16. That's a very important number to watch. And if we get down there, it'll be really interesting. 877-927-6648. We'll be back after these few words.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted a chart from our friend Kevin Murphy. You know, Kevin was the fellow who worked with Bill Ehrman out of Nashville, Tennessee with Ehrmanometry. This is a chart that he worked on the 17th of June. It's a very, very interesting chart for several different reasons, but if you'll look at the low way back here in 1942, is that a low or what? You can imagine I was just a little shaver at that time. I was only 2 years old. Anyway, what we're looking at here is a market that may have made a major top on June 19th. He's going to try to be our guest here something's wrong with it. Hold on a second here. And we'll see here, you'll notice that we have this section here where all of these ratios are related to the pi, as you can see, you know, circumference of the circle. It's 2 times pi, 3 times pi, but it goes back and looks at all the highs and lows, and look how they all match up. I mean, it's just really an amazing chart for symmetry. And of course, we had Norm Winsky on, and we also had Shane Smolian on, also talking about this incredible symmetry that we're having with the astrology things coming at that time. Now, whether that is going to be the same or not, I don't know. The chart is rather small. I'm sorry. I don't know how to enlarge it, but that doesn't anything new here. But anyway, he's going to be on, and he'll have us. He'll probably be on right after the holiday, and he'll give us a really good spot to tell us what these things are all about. Also, as a point of inference, we're going to have Norm Winsky on July the 6th. He has some really important astro information to talk to us about. And so we want to hear what Norm has to say. And then after the holidays, we'll get back to some of our other guests. We're going to have Bob Miner from the Dynamic Trader in, and we'll also have Bill Meridian. And I'm still hoping to get Larry Williams on. Larry's been a friend for 50 years, and he's one smart cookie, and I'd like to have him come on the show also. So that'll help give you some more information of what's out there from other people and things. But right now, just keep an eye on these things because they can get volatile. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.